Hello, Wolfpack. This is the last line of defense, right? And I'm not changing my tone. This is what I've said all along. I've said that 53k is the last line of defense for Bitcoin. If we close below that on a daily candle, all right, and specifically, I'm going to adjust this slightly. If we close below the bull market support band, that's going to be over for sure. I don't like where we are. I don't like where we are on Bitcoin right now. I think it looks pretty bad, okay? But I do have to acknowledge the fact that I don't want to get bearish at support because we are at support, okay? The bull market support band has historically offered a large amount of support. Now, the whole kind of scenario would be said we wouldn't test the bull market support band and how good that would be for cyclical theory has faded away. That's gone. And that's really, really, really bad. But, you know, let's not focus on what we can't change right now, okay? That is bad news. We shouldn't be testing it right now. We've overcorrected, right? Some people would say we haven't overcorrected. I say we have, right? Because we shouldn't be testing this again. We tested in September. We only test it in September. And we don't usually test it this soon after a retest, especially after we see the same structure that led to the retest. And we also don't historically go below the price that, say we hold 40k for support. We've never actually gone below a price in which we've held for support, and the bull market support band. It's happened dozens of times in history. We've never gone below that price. So if history has anything to say, we should never be going below 40k again. And since we're testing it right now, we should never be going a lot below 53k again. Now, obviously that's possible, but the higher we test it, the less likely that becomes, right? For a bull market for a bear market not to go below 53k with the regular 80% correction, that would indicate, and let's just zoom out here a lot, here we can see that would indicate that, well, let's try and get an estimate here. Okay, so it's not going to be from there. 130. Oh, I'm going way too far. Alright, I think I zoomed out too much here. Hold on, guys, 1 second. So the point is, let me, here we go. For a bull market's usually correct, here we go. 80% roughly, okay, from the top. For a bull market to hold 53k, for a bear market to hold 53k, which is what we test the bull market support band, we historically don't go below that region again. So we would need to actually see bull market top at around 230k. All right. So it's pretty clear that either lengthening cycles is happening, and we do have a chance of reaching a bull market top that high, or the bull market's over. Okay. I don't think it's over yet. But it's a very, very, very strong chance that it could be over if we drop below this. In fact, if we drop below the bull market support band, start closing below it, it is over, right? It's called the bull market support band for a reason, right? Not necessarily to indicate whether we're in a bull market or not, because we did drop below it in July, but it does indicate that if you do drop below it, you're going to at least see a few months of bearishness, right? Like we saw here from May to July. We saw, almost 3 months of lurking below that region and bearish price action just going downwards, okay? So that's what we're going to be looking at if we do drop below this. Basically another one of these, okay? And maybe even worse, okay? Because people wouldn't be that encouraged to get back into crypto when it comes all the way up from 29k and just kind of double tops and then comes back down, even though it wasn't really a double top. Essentially, on a larger scale, it kind of was, okay? The difference between 64k and 68.9k is not a massive amount. I can imagine the people who bought here at 64k would be pretty infuriated right now. But anyway, the point is, we do have this support, and we also have, and I want to outline this quickly, we'll remove all of this, we also have a support coming from a trend line that you would have seen a lot around Twitter recently. Okay, a trend line that starts here in July at the bottom. Let me just fix this up. Hits through September, and we've just actually wicked down and touched it right now. Okay, similar thing happened in September, right? We saw a drop down, we saw a plateau, we dropped down again, wicked down and touched the trend line, bounced around a little bit, and then went up. So if we're going to do the same thing we did in September, it would make sense. We dropped down, we had a little plateau, we wicked downwards here, touched the support line, probably will trend a little bit and then go back up. Look, that's the ideal scenario, okay? And it is very much possible because we do have pretty much the strongest support in Bitcoin and crypto history, and you can see it's lined up perfectly with this trend line. So this is an area for buying, okay? This is an area for buying, but it is an area you should be buying if you are willing to watch the market constantly so you know when to sell, okay? Daily candle closes are absolutely fundamental, right? If we get a bad daily candle close below this line, that's going to be an exit signal for the entire market. Okay, we don't want to close below this trend line at all. So I would say, I said 53k is my last line of defense. I still stand by that. 53k is technically the last line of defense. That is where the structured support is. But the trend line is ultimately the absolute last line, and that right now would require a close below around 51.6k, and that's trending upwards. Okay, and it would be at 53k in roughly a week. Okay, so it's technically, 51 to 53k have to hold it, can't close below that at all. So look, it's going to be an interesting time in the market, and we have, the VVPR we can bring up again, which is volume profile. It kind of measures how much historical buying and selling is in a region. You can see on this wick downwards, we actually hit the dead set middle, the crevice on the VVPR, which suggests that below that point there is an abundance of buying pressure. Okay, and that lines up with the bull market support band as well. So there's an abundance of buying pressure below this wick. And we're kind of in that crevice right now. So every single wick we have to the downside, we will see massive buying to pump us back up, at least for a period of time, right? Until basically the bulls get bored. If the bulls get bored, if the bulls see that we're not moving out of this region, that's going to be bad, okay? We want to be seeing something like we saw in September, where essentially there were not enough people willing to sell on support for Bitcoin to go down. I think, I personally think that we're still bullish, okay? I think that we're still bullish, but we're on a very, very, very thin line. Okay, we're on a very thin line. And look, we need to be seeing a bounce here. There's just no way around it. I don't want to be that person, and I will not be that person who, like in 2018, there was people like this who said, this is the critical level. And then you lost that level, and then they lowered it down. They said, no, this is the critical level. And then you lost that, and then they lowered it down again. You said, no, this is the critical level. We can't do that, okay? We have to be certain this right here, this trend line, is the critical level for Bitcoin. If we close a daily candle below it, it is over at least for a few months, okay? So yeah, that's what we're looking at here. I suppose there are some other things I could show you. We are kind of primed for a MACD cross at some point. MACD reset to levels we saw in September. In fact, we have a bit of a hidden bullish divergence on the MACD. We have a bullish divergence on the daily chart just forming in slightly now, like we saw in September. Look, we saw one in September there. We're seeing a more slight one right now. As for support as well, we do have, in terms of price support, we have the September top at 53k that we don't want to be closing below as well, and we've held that for support here, so we could hold it for support again for sure. As for the upside, well, as I've said in previous videos, we're looking at 61.2k, and that is due to the fact that the volume profile POC is in that region. Well, maybe not anymore actually, but it is in that, if we zoom up to this entire construction here, the volume profile POC is at 61.2k, you would see there, I've just mapped it out, and that would be needed to flip this entire construction that we've had to the downside. Once we flip 61.2k, what we would have done is created a cut formation most likely, and also this whole construction would be under us, and we will be ready to flip this for support and head to the upside to new all-time high. So 61.1k, it seems like it's far away, but it still is the critical breaker, and it doesn't matter how low we go, that's still going to be the critical line of resistance. If you're very, very, very conservative, I wouldn't be entering until 61.1k or 61.2k, sorry. I do have entries, and I've said in this video that I do kind of, I'm not going to say recommend, but I personally am entering this current market right now with very tight stop losses, because I understand that we're at critical support, and I understand the probability for a bounce, or at least a dead cat bounce, but probably a bounce is pretty damn high in this region. So look, this probably is the place for some buying if you're willing to look at the market pretty much 24/7 for the next week to see where it's going to go. Otherwise, wait for a continuation, even wait for a small higher high, right? Even wait for something like this region here at 58k to be flipped. You can get a high there, and then you can start to see this rounding out. Right now, if you've got a low risk tolerance, I wouldn't be buying right now if you've got a low risk tolerance. But the point is, the risk reward ratio in this region is pretty good, okay? Because there is a decent chance that we're going to get something like we saw in September once again. But one side of me says that, and then the other side says, a lot of people are expecting that, and then it's not actually going to happen, right? But the Fear Greed Index is basically printing fear, and has been printing fear for the last couple weeks. I assume this candle here is going to print extreme fear, and I don't really see where the selling pressure is going to come from right now, to be honest, especially considering the fact that most of the people who've been buying Bitcoin in recent months haven't actually been retail, they've been institution and whales. So So that's another thing to consider. It's like, well, the reason we didn't have this blow off top, the reason we didn't have a massive rally is because retail's not buying right now on a general basis. Retail's too scared. Okay, retail in this current state of the market, in my personal opinion, this is speculation, obviously. They're scared because they're kind of pinned down by a lot of media reports about, for example, the new COVID strain and things like that. Evergrande, how China's going to have a housing collapse just like 2008 in America. They're pinned down about inflation. They're very confused about that. They're pinned down about can't even, leaving the house. Housing prices are going up. Gas prices are going up. So I think retail on a general basis is not in the same situation it was in 2017. I think that's one of the reasons why we're seeing a slightly different bull market. Although the structure is still technically the same, right? It technically is the same. We bottomed out in July, topped out in September, bottomed out in September, had all-time highs in October, and had a November correction. The November correction has just extended for a lengthy period of time. So that's basically it, right? This we just need to be holding that trend line, and that's basically the last line of defense. And I'm not going to be flipping my tune on that. If we lose that, I promise you, we're going to be entering a bearish phase in the market, in my personal opinion. And I certainly won't be buying into anything until we see strong confirmation of a continuation. And if you want it to be conservative, again, 61.2k is what you need to be looking at. You also need to be looking at this RSI downtrend. You need to be looking at breaking that to the upside. Look, there no doubt are similarities between this and the September move. And as I said, I am bullish on the market still. I'm technically still bullish on the market. But being cautious has literally never hurt anyone. Okay? You don't lose money being cautious. Yes, you might not gain as much, but the point is, if you are a conservative person, if you don't have, the finances to continuously take these massive risks, just wait for something small, right? Wait for 58k. But buying right now is not a massive problem in my personal opinion. You can have tight stop losses and you can still have a relatively low risk reward ratio from it. So look, we'll be watching it closely. You guys should be watching it closely as well. This is the last line of defense in my opinion. And good luck to Bitcoin, I guess. Thanks for watching, guys. Hope you enjoyed. Catch you in the next one.